In this presentation, we're going to add a bank account type to our chart of accounts, as well as the beginning balance for the bank account, which will appear on the balance sheet within QuickBooks Online. Here we are in our Get Great Guitars file. We're going to first take a look at our balance sheet to consider what our objective will be. We're going to be opening up the reports then down below. So we are in the reports. We're going to be opening up our favorite report, that being the balance sheet. So I'm going to scroll down in the favorite reports, open up the balance sheet. Then we'll change the dates up top. Going to be changing the dates from 01/01/20 to 12/31/20. This is going to be the point in time that we will be working in, the year we will be working in. I am zoomed in, by the way, to about 125 on the zoom. So we've been entering our beginning balances into the system. We've entered some of the more complex beginning balances that have supporting data to them. Now we're going to be entering the beginning balance for cash, or the checking account. Now this is a little bit different than you might have in just basically accounting theory, because if you're talking about, if you learned accounting debits and credits, you probably just lumped everything into cash. There was cash, but obviously in practice we have cash, and then we could have, things that are on hand that aren't in the bank yet. We might have multiple accounts related to cash, multiple checking accounts. So typically small businesses will have, one checking account and then undeposited stuff at that point. So that's what we're going to add. We're going to add the cash account. That will be right up top here. Now, to do that, we're going to set up a new account, which is we're going to put under the account type as a checking account, which will be a special kind of asset account, a special type of current asset. The thing we have to be very careful with cash, or the thing that's a little bit tricky with cash, is that we need to reconcile the bank accounts with cash. So we're going to enter the beginning balance here, which will basically, if we had our prior, balance sheet from the old system we were on, if we had set up a cash account, and now we're trying to enter that into our system, even though we set it up sometime in the past and whatnot, it might have some money in it already. We've got to enter that beginning balance here. Then we're going to have to deal with how are we going to reconcile this account later, meaning we're going to have to kind of check off transactions in the bank account. So we'll talk about that later on when we get to the bank reconciliation point. At this point, we're going to say, okay, whatever's on, the balance sheet from our prior system, we're going to enter it in the current system. We're going to do the same process, enter it before the current year that we're going to be working in. We're going to be working in 2020. Therefore, we're going to enter the new cash balance as of the end of 2019. So to do this, let's scroll on down, or let's duplicate this tab by right-clicking on the tab up top and duplicating it, so we have the trusty balance sheet ready over there. Then I'm going back to the tab to the left. Then I'm going to go down to our chart of accounts. So we're going to do this from the chart of accounts. So we're going to go down to the accounting, and then to the chart of accounts, which you could do with the menu to the side, or simply that'll be the first tab of the two. Then we're going to scroll down. We see our chart of accounts down below. We note there's no account currently, because it would be the top account. The chart of accounts typically being in order by account type: assets, liability, equity, balance sheet accounts. Then income and expense, broken more in depth into specific types of asset accounts. Those that are more liquid, cash would be on top, then accounts receivable, other current assets, and then other assets. So we're looking to add then an account, which is going to be our checking account. So I'm going to scroll up top, and we have our buttons here, which we have new, and then we have the import once again. We're just going to select the button. So we're going to select the button because we're going to add one account at a time. We're not importing an account here. And what we have first is going to be the account type. So whenever we add a new account, this is going to be one of the key things that we need to set up, is going to be the account type. So we're going to be selecting here a bank account. So again, it's a special kind of asset account. We want to make sure we put our checking account as a bank account, because QuickBooks will treat it a little bit differently. Notice that when we look at these account types, they treat these accounts a little bit differently. The bank account's going to have a register, and we're going to be able to reconcile the bank account. We're going to have reconciling functions to do that. Then the accounts receivable, you'll recall, we need to have it be special because it needs to be supported by customers. So QuickBooks is going to limit us to not be able to really post to accounts receivable unless we assign a customer. Accounts payable, similar with vendors. So that's why we have the more detail rather than just assets, liabilities, and equity. Okay, so we got the bank account. We're then going to select the detail account. I'm going to call it the checking account. So this is going to be the checking account. And then the name over here, we have the checking account. Now, you might want to put the checking account and then maybe the bank name. If you have multiple accounts, you might want multiple accounts. If you might have multiple accounts in the same bank. So if you label the bank, that might not differentiate them enough. If you want more detail in your reports, you can put the checking account and then the account number in it, or checking account versus savings account. For example, you might put the last 4 digits of the account number, because the last 4 digits will probably be distinguishable or different in there as well. If you don't want that kind of information to be on your reports, like on your balance sheet report, you could also make these accounts basically sub-accounts, or print the summary report so that you basically only show the cash line and not the detail lines, which would show more detail for your actual accounts, which you would be using as we jump back and forth with the data input. Okay, so then we got the description. I'm going to leave blank. Is it a sub account? So again, if we wanted to make it like a sub account, if we wanted to make a cash account as general and then sub accounts of it, we could do so. Although you'll recall QuickBooks will have basically the account of cash that they can kind of collapse. And if we have a summary report, it'll be kind of a sub account. So be careful with the sub accounts. They can be useful, but some people kind of go overboard, in my opinion, on the sub accounts. And then we're going to go down here to the balance, and we're going to say 25,000 in the balance. And once again, we want to put that in as of the end of last year, last period. So 12/31/19, because we're going to be working in 2020. Now, once we do this, what we got to say that, and again, you don't ever want to be doing this beginning balance thing except when you first set up the company. After that point in time, you really shouldn't be using the beginning balance, at all. But anyway, so what's it going to do when we put this beginning balance in? It's going to increase the checking account. Some other accounts got to be affected by this. So what's the other account? Maybe it's going to make a deposit slip of some kind, because that's the form that's going to be created when we put that in. Where's it going to? Is the other side going to go to income, or is it going to go to equity? Probably opening balance equity. I would think it's got to go somewhere, right? So we're thinking that we're going to say save and close, and there we have our checking account. Notice it listed it right up top, with the bank account type, which is a type of asset account. So that's the order that it's going to be in. And then if we go to the balance sheet, let's see what happened. I'm going to refresh the balance sheet. I'm going to click up top and then just say enter to refresh the URL. And then if I scroll down, there we have our checking account. So notice, again, we didn't make a sub account of it. We just put it under the account of checking account. But note that QuickBooks does have those accounts where they basically have a grouping underneath the account types. So this is an account type. We set it up as a bank account type, and therefore we can give it kind of a sub account, even though we didn't make a sub account, but it's in its own little group here. So when you go back and forth to the reports, then it's nice to have something like the account number here, just to make sure that you don't, you can differentiate between the accounts. You're basically using this as your chart of accounts, or kind of like your trial balance. But you also, when you generate the reports, might want to make a summary report so that, you don't have the account number there. You could just call it bank accounts when you generate the reports and give them to someone else. That also permits you to have multiple checking accounts, savings accounts, and whatnot that you can use for your data input process while still grouping them together when you send those out. So here's our 25,000. If I click on that and go to our Zoom, we're then going to change the date up top, 2019, so I can see the data that has been entered into it. I'm going to go ahead and run that report again. There's our deposit. So notice what type of form it used, a deposit. That makes sense, because if we increase the cash account by just putting that little button in the opening balance, and it said, oh, well, the thing that increases cash is the checking account is a deposit. So it created a deposit slip. So let's take a look at the deposit slip. We're going to go into it. So here's our deposit screen. This is a form, data input form. It says it's going to go into the checking account. That makes sense. Well, where did it put the other side then? We're going to go down here and say, well, QuickBooks decided just to put the other side. It just made this up, and it put it into the opening balance equity account. So the other side is going to the opening balance equity. Where did it go? There it is. It's going to the opening balance equity. So let's close this back out and say, all right, that makes sense. So it put the other side, forced it into equity. We knew that was going to happen. It's going to go into equity in one way or the other. And either it goes to the income statement, to equity, to retained earnings, or they put it into opening balance equity, right? So I'm going to go back up top, and I'm going to go back to our balance sheet. And so the other side then went to the opening balance equity. So it's going to be in this account. So in the balance sheet account, it shouldn't have affected, it didn't affect the profit and loss. They just put the other side to this kind of made up account that's not really a real account that you would typically see in any kind of financial statement. And that's why it's there. So QuickBooks can basically say, hey, look, this is the opening balance thing. And we just put it there because we didn't know exactly where the other side should go. We're guessing it should be an equity of some kind. So I'm going to then open up that just to take a look at it. And we'll change the date up top once again to 2019 to see what this opening balance stuff is doing. And here's all the stuff that's basically in opening balance. We have the inventory stuff. There's the deposit. So there's the information in opening balance. So you can see what's happening. We're setting up all the balance sheet accounts. And the other side is just in one way or the other being pushed into equity. And if we set up all the balance sheet accounts correctly and put the right numbers in there, then equity will tie out to whatever it should be, because everything else will balance out in equity, and the double entry accounting system has to remain in balance. So if you're working with a balance sheet that's in balance, going back to the balance sheet, and we're entering every account into the balance sheet accounts, assets, liabilities, once assets and liabilities are all right or all correct, then the other side, equity, must be right. It's got to tie out because QuickBooks won't let you be out of balance. So equity will then tie out either through things going into the income statement, then rolling into retained earnings, or it's going to be in this opening balance equity, which we will clean out basically at the end, taking it out of opening balance equity and putting it into retained earnings. Okay, so let's go back to the prior tab, and I'm going to go to the accounting again. So we're going to go to the accounting. Let's just open up the accounting. And then the other tab note was the reconciliation. So the reconciliation, the major account that you're going to be reconciling will be the checking account, meaning we're going to compare our numbers to the bank statement numbers. And so if I go to get started and we look through the reconciliation process, and then I go into the reconciliation, we have the checking account here. And the way we reconcile is we're going to have to take the beginning balance on the bank statement and then tie that out to the ending balance on the bank statement and basically tick and tie everything off. Now the problem with this is that we could have some outstanding items on the bank statement, right? That basically, and those outstanding items could kind of, in other words, in our bookkeeping system, we may have written checks in the end of December 2019 or something like that haven't yet cleared as of January 1st, 2020 or January 2020, and therefore they're going to be on the bank statement in January 2020, even though they're already included in this beginning balance. Those are the things we kind of reconcile, those outstanding balances. So we'll get to we'll talk more about at least that kind of issue once we do get to the bank reconciliation time. So at this point in time, what we're doing is we're putting the $25,000 on the books so that we can get our balance sheet in balance. Then when we do the bank reconciliation, we're going to have to think about whether that beginning balance there includes outstanding items that we'll have to take into consideration when we do our first bank reconciliation. Then from that point forward, everything should be clean, good to go.